Hi, everyone. Nikita, Mary, Alexander. Hi, Ryan.
Hey, Dale.
Hey, Sinatra. So, happy MLK Day, guys. We're honoring here in the U.S. Martin Luther King, who is a great example of how you could fight for change without violence, even with the risk of violence being inflicted against you. So, a great
Sounds like my
example.
first marriage.
Uh,
Sorry. Good morning.
Well,
Dude,
and you know what?
you hold a really big grudge. Have you ever seen a therapist for this, Stelios?
Yeah.
He laughs about it now. But
50
No, we're talking 20 years later. Here we are.
yeah, but you know what? I think it's Stel, it's not easy to not respond.
At least he really fixed the first mistake with having a great second marriage.
Yeah,
I
there
love
you
bro.
go.
Thank you.
There you go.
Yeah. So what? I mean, everyone gets stopped out in life once in a while, Blake.
That is true.
This is a good point.
Okay. It doesn't mean
That
you
is
don't
very
take
true.
another trade, right? So Stel waited for confluence in his second time, right?
True.
Anyway, so I want back to what could break up marriages, trading. What do you think, Ryan? It looks like we had some action in the last 24 hours where cable took out Friday's highs by a little bit, went almost all the way to 78.6, and now looks a bit negative.
Yeah.
What do you think?
The Dixie's going to 98 because Morgan Stanley have just said so. So,
Okay, so that's a fade.
Michael Brown's just pointed out a tweet, a good point. It seems like all the consensus forecasts from some of the major banks about being bullish dollars have lasted 16 days of the new year. And they've all turned tail. So everyone's expecting the euro to rise, dollar to fall, Dixie to fall. Yeah, probably the bottom's in now.
Well, because it's been painful with that forecast for them.
It's because they've been wrong.
Yeah, right.
That's why I don't
Here's the
listen to
beginning of the beginning of the year right here. So
yeah, if your bank forecasts were worth the paper they written on at the start, you wouldn't need to revise them every 3 months.
Okay, so they need to be in here. They need a subscription to ForexAnalytix.
Exactly.
So that's a remedy. And little pop in the yen after making new lows. You worked the short side of that very well last week. Cover any?
I covered some last week. I didn't manage to get that drop down. It pretty much hit the 50 fib of the big move from 102.
Yeah.
That was at 127.27 on my artist pad, and it pretty much tagged it to the pip. Big area. We've been saying that 120, that low 127 zone. It's bounced, and where's it bounced to? It's bounced to a broken fib, and those prior support levels and resistance levels around 129 right now on this immediate bounce, and it hasn't managed to get further than 129, so that tells you what happened there. I think we're going to tread water a bit.
We'll probably have to get back above 29, huh? To show something, get above a previous low.
Yeah, that's gonna be likely, but we got the Bank of Japan. We could come in Wednesday morning and it could be at 132 or 125, or even worse than that. We just don't know. So I'm expecting perhaps to see yen pairs in general at least not breaking lower from here. Maybe we see a bit of a reversal higher just for that Bank of Japan risk coming into play. It's been a strong run the last couple of weeks, and this is a big risk event. So I expect to see plenty of people taking their money off the table.
So I've seen some bullish euro calls that are talking about 111-ish in euro and 129, and it didn't come from a bank. And that would probably take exactly what that bank. Who was it? Morgan Stanley?
Morgan
JP
Stanley,
Morgan?
yeah, 115 by the end of this year, they reckon, for the euro dollar.
Okay. All right. Gold, which I definitely underestimated, even though I shouldn't have because of the gold silver ratio. Where's it going to stop? I think you have to buy any pullback now, 1880. And you know how sometimes you have to be the wrong way in the market to know you're the wrong way?
Yeah.
You know, so, you know, I had a couple successful shorts in silver, but I think this was Friday's close. I said, you know what? It's taken too long. You know, I was looking for 22.5. The first break was the lowest level it got to. Probably have to buy a pullback in silver too. Maybe we're going to 25.5 or so. So, you know, the old thing, if you don't learn how to change your mind, you won't have any change left. And, you know, I'm thinking that this was 4 and now we're in 5, and you buy a pullback and we could go to 25.5. And even the ones that work, like platinum, the 3 drive worked, looks like it could rally again.
Yeah.
So,
Well,
Annie, you're the metalhead, Stel. What are you thinking
still,
here?
man. Okay.
For me, nothing changed
Forget-
on silver. 2450 daily close and above, I think, is the level. Otherwise, I wait for the low 22s. Having said that, it looks like things are itching to get higher. Everything, you know, look at cryptos. You know, Bitcoin is up 20% within a few days, and or whatever that is, you know, 15%. So it looks like risk still wants to get bid. So for that reason, I think it's more likely that metals will break to the upside before, you know, rather than going lower first. But hey, the levels are there. Those are my levels for silver. I'm waiting patiently while the price fluctuates and basically does not very much.
Yeah, S&Ps too had a great week, and you know, backed off from this line. But yeah, with Bitcoin, and you know, really what wasn't really the signal when copper exploded, a big risk on call. And you know, we're probably going to get some type of correction. I think Blake talked about the highs last week were near a fib level. So that's about all I have on a holiday session. Not a lot of conviction about anything. So who does have any? You could just speak up.
I do.
I figured you would. So grab the screen, brother.
Well, yeah, I will. Dale, and thanks for being here today. I know it's a holiday. I do understand that, and I appreciate you being here with the team. You know, as I explained in the week ahead video, and I'm gonna you know I want to talk to the guys about this. You know, we're heading into a big week this week, you know, following obviously the CPI data last week, and I have to go back and, you know, just make sure that everybody understands from last week. The CPI data that we got last week, it may have been you know, it may have been in line, but it was still in line, right? It's not like the data that we got last week was some massive miss and we had, you know, the dollar breaking down, you know, last week. I mean, we did have the dollar breaking down, but it wasn't like the inflation data was, you know, that far off. And with this week, you know, you go into this week and I'll just, you know, show you that real quick. If you're in the ForexAnalytix chat room, here's the trades room. You can see, like, you know, some of the trades that, you know, I updated last night as I got out of all the dollar pairs. But I want to go over to like the news and research room really quick. I'm going to take us over to these are all just news stories, headlines. This is Friday, right? This is the daily sentiment index. You can see here, you know, the VIX is at 10. Volatility is at 10. Very, very, very extreme. Gold is at 92, also a very extreme number, extremely bullish, you know, and same with the pesos, some extreme numbers, but you can go through all the rest of those numbers and realize that we are at extremes across the board. The problem that I have with that, as I explained during the week ahead video, is everything that's really everything that's registering as an extreme is at a pretty key inflection point and could really influence what's happening in the in risk just in general. So, you know, when you have a week like this week where you have important, like I would say that the most important thing that's happening this week, well, we're going to see some, you know, some inflation data, some we got even got retail sales data coming out here in the US later this week. But we have the BOJ, and there's been a lot of speculation about what's going to happen with the Bank of Japan moving into this week. Like I want to get opinions of what Ryan, Stelios, Kman, Steve, I'd love to hear what you guys' opinions are of the BOJ going into this week, because, you know, there is some speculation that the BOJ might move on, you know, they're already adjust their yield curve control some even more. But there's a high speculation of that even before Kuroda has, you know, has you know, basically stepped down or retired. So, you know, Kman, are you here this morning?
Yeah, good morning, everybody. I'm here.
Hey, good morning, Kman. So, you know, I was long yen. Excuse me, I'm gonna have to stop speaking here in a second because I'm still like sick from last week. You know, the yen's actually shown a bit of a reversal today. What are your thoughts of the BOJ this week?
I don't think it's a reversal. It's just a positioning. People probably the market has sold record amount of JGBs, and you can't just sell every day. Although some funds will still be on it and can, but it's just a bit of a correction going into the Bank of Japan. We also had a little article out that the main economists expect Amamiya, who is a bit of the same liner as Kuroda, coming on as the main candidate to replace Kuroda. So we're seeing a bit of correction in the yen pairs. I've shown a couple of interesting ones on the crosses. I think dollar is still a bit away from important level. There's the weekly Ichimoku cloud is top side is at 129.65, I think, this week. So that's going to be important for the Japanese clients, I reckon. But for now, it's just a bit of a correction. I think that people like Citi, who expect that Bank of Japan could abandon YCC straight away or just at once, is completely overdone. I don't see how they can possibly do it without creating an absolute mess in the global markets, not only in yen. I don't see how they can do it, because they would put their own government at risk as well of needing to pay up 3-4%. I don't know how much for their massive stimulus. So I don't see that happen. So it's going to go in minor tweaks if they do anything this week. Completely open on what they or if they do anything on this week. I just don't know. But for the time being, I think this is just a correction yeah, the dollar is a bit better so yeah, it's just
I think you got a great point, especially on positioning. I think positioning is really I don't want to say wrong, because you know, I know we've had a lot of discussions about, you know, being long yen going into, you know, 2023, and I still believe it's going to be one of the better trades this year. I just, you know, after the move that we've seen the last couple of weeks, it's like, okay, well, you know, maybe everybody's got the same idea right at this moment in time, but I still like buying yen or selling dollar yen. I just don't know if I necessarily want to do it at these levels as we approach this really critical support. So
it depends whether you. The thing is, if somebody's in already, like Ryan has been selling and he's been downscaling a little bit, so the average is really good. So you can keep your overall view. Entering at these levels is a bit of a risk, in my opinion, because if Kuroda and friends don't do anything on Wednesday, you could find dollar yen up at 130.5, and I don't know if how deep people's pockets are, you know, how deep the pockets are.
Right. Or how much leverage anybody has applied towards their ideas, if you will. Thanks, Kman, for your input. Ryan, what are your thoughts here on the yen? You have any views here?
Yeah, I'm short, as Kay mentioned from last week. Happy to stay short, happy to sell decent rallies. I think if you're not in a trade, you've got two things you can do. If you favour the downside for dollar yen, what you want is completely unchanged from the Bank of Japan, no surprises, no nothing, continued pumping of QQE, all that sort of stuff. Then you get your rally, excuse me, in dollar yen. I think the big trade to come on that, if you want a final confirmation, is wait for the CPI data out of Japan thereafter. That's coming on Thursday. Because if that's a big number, you're going to see it reverse right around again, and the market's going to get back onto those Bank of Japan expectations because they are seeing inflation rising. It's expected to come in at 4% on the core versus 3.7 prior. If it comes in that or hotter, Japan has got its inflation. The Bank of Japan has got its inflation. You know, the market's going to sell dollar yen again or buy yen again in spades. So I think if you're looking for the perfect potential trade on that, is unchanged Bank of Japan, watch the rally there, wait for the CPI numbers, and then, you know, if you want to be short, that's your time to do it.
All right. Well, thanks, Ryan. And Paul brings up a good, by the way, Paul, congratulations on winning the free month of ForexAnalytix. I hope you're using it, and I hope you're enjoying being inside of our community. I haven't seen you in there, so say hello when you get in there. Paul that just commented, but he was saying that the divergence on the dollar yen, I mean, it's pretty significant technically, and I agree with you. And like I said, I got out of my dollar yen last night. I even tweeted about it, which I don't normally tweet my entries because I specifically leave my entries for here, you know, right here. And you know, talking about the trades I'm in. But for those of you that already, you know, sometimes I guess I'll give it away, but you know, this is one of those big clues that I agree as we're coming to the support. Stelios, and by the way, I just saw that Grega's here. Grega?
Hey, yeah.
Hey, stand by. I'd love to get your technical views of the market if you don't mind. And your opinion of the yen, but let me hit Stelios and Steve really quick for their opinions, because you know, opinions are like belly buttons. Everybody's got one, so might as well hear from them, or they might be like buttholes too, right, Dale?
Well, in the car business, they say there's an ass for every seat.
Sorry, I've been dealing with other stuff over the past 5 minutes. What are you talking about?
Sorry.
Nothing. It's just the yen. Do you have any opinions about the BOJ this week? You know what? We'll skip you, Steve.
I actually don't. Go to Steve.
Good. All right, Steve. Steve, what any opinions here?
If Steve doesn't have an opinion, I'm going back in the car business.
No, Steve's always got an opinion. Let's hear it, Steve.
The BOJ has clearly shown that they want to make changes. I think in a positive direction, at least partially undoing some of the many big mistakes they've done in the past. Now, how far they're willing to go, I'm not very optimistic about it. Any change, though, in that direction will obviously not be risk on or yen negative, right? So I can't try to guess any further than that, but that's a general approach to the issue.
Okay, well then there we go. Dale, see, look, that ass wasn't that big. All right, thanks, Steve. Appreciate that. And you know, just looking at the yen futures, we are also at the 38% retracement. You can see that divergence that Paul was mentioning in the dollar yen. You can clearly see it in the yen futures as well. So, Grega, good morning, and how are you?
Hey, I'm fine. Just we have some snow after quite warm summer a few weeks back, so now it's normal.
Well, here in the United States, I'm actually surprised that Dale has not floated away yet.
Building an ark in the backyard, buddy.
I mean, seriously, we've got more rain than we've seen literally in a decade.
The drought is over.
Drought is over. No, we got a lot of work to do. But anyway, that's great. Maybe you got some snow. That's nice. I'm sure the kids are loving it. So what are you thinking here technically let's talk about the yen first of all. Do you have any opinions on the yen going into the BOJ this week? And feel free to show your charts too.
Yeah. Okay. So actually, we've been okay. Can you see the
By
charts?
the way, you guys are going to get an Elliott wave view of the yen, and Grega is our Elliotician in the in-house Elliotician for the ForexAnalytix platform. So you guys can read his analysis every day as well. So yes, we can see your screen here.
Yeah. So actually here I'm looking at the COT data. It's still not updated here. I'm looking at on bar chart, but still we can clearly see that large speculators are buying Japanese yen quite aggressively. Obviously, we are looking here at the futures, and notice that we are approaching to the similar levels when looking back here from mid of August of last year. So it's clearly that we are at some extreme of optimism regarding Japanese yen. So from an Elliott wave perspective, since we know that markets moves from pessimism to optimism and vice versa, I'm just concerned regarding that extreme. I think that we are approaching some very important level here. Firstly was 130. It was broken through, so that should be now some key resistance. But the next support you have here goes to mid of 2022, which is 126. So I still think that we are here at the late stages of this first impulse. And if you look here closely, not really the best looking wedge pattern, but somehow we are trying to bottom here. Okay.
Is that an ending diagonal there?
Yeah, it could be, but we have a pretty aggressive drop here. So it would be too soon to say that we are bottoming. But if we rally back above 131, then I think that we would have some low in place. And I think that corrections still could be limited on the upside, of course, 134, 137. So still, I mean, at the start of the year, we talked about the potential corrective rally, the higher degree one. And I think that this one is still coming and that we are not going to see the breakdown just yet. And the reason is also looking at the US dollar index, clearly 5 waves down as well here. So even this one suggests that we could be here in late stages of this impulse. So again, just be aware of this rally. Also some support here as well around 100. Obviously, it's a very big level. And after all, you have the S&P 500. We have seen pretty strong move to the upside there on Euro, on Aussie. Metals have seen a very nice move to the upside. We are also seeing crude oil trying to stabilize a bit, but looking at the S&P 500, still hanging out here in this 4K resistance level. So if suddenly we see a sell-off here, I think that those currency pairs that I just went through will see a reversals.
All right. Hey, Grega, gold also, I know you just mentioned metals briefly, but gold, the daily sentiment index is so strong. And, gold's basically just kind of pulled silver higher. And I know, Dale, you've been looking a lot at the gold silver ratio as well.
Yeah.
And trying to trade silver on the short side. It actually looks like gold might reverse up here, above the 1900 level. And if it does, maybe this is going to be, Stelios's, lucky day where he can buy gold, he can buy silver at 18 again. Just kidding, Stelios. I'm joking if he's listening.
Yeah, but I think that Stelios mentioned last week that he is looking at silver at the supports around 22.50,
22 and a half or something like that. Yeah.
Correct.
Yeah, and I mean, buying dips still makes sense here. I think that we bottomed here last year, but we are just now testing this massive trend line at the upper side. But since we have the impulsive characteristics, I think that eventually we will see a break higher but buying dips, I think that this 22.50, or I have it here around 22.20, this still makes very nice potential supports to buy dips after this wave 4. So I think it's a consolidation on the way up here.
Awesome.
Yeah.
Okay. Dale, what do you have any questions for Grega?
How about yields, Grega? Wrap it with that.
Well, we have
Like
seen
the yen.
Yeah,
Yields.
I mean, we have seen a very nice move higher in yields, but not, just a second to load my charts here. Okay, but notice that here we have 5 waves up on these nodes looking at this intraday structure. So even if we are going much, much higher, I think it's time for a pause here. So I would be watching for the pullbacks potentially this week. And this could obviously means that dollar yen could stabilize as well here. We also failed to break, to make any decisive break above that highs from December.
Yeah. 10 years like that. Yeah.
Yeah.
Same thing. Notes 10-year. Right. I was talking yields. Thank you, but Wizard.
Yeah. Thank you.
All right. Thanks, Greg. I really appreciate it. I'm going to go ahead. I'll take back over here for a few minutes. Dale, I know you have an interview coming up. You know, one of the things that Lucas brought up is that in the patterns in play, Andre just posted a harmonic for gold as well, and you know, looking to go, you know, bearish and reverse here. You know, this is interesting. I wanted to I'm going to sit here and I'm going to talk a little bit about this page that we're on. I was in Southern California a couple of weeks ago, and I was, you know, talking to business owners about, you know, utilizing the FX market to kind of trade around their busy schedules, you know, because, you know, when you're a business owner and you put, like most business owners, you put 70, 80 hours a week into your business, you know, as a partner in a business or a business owner, you're kind of, you know, a slave to your business, if you will, but you have those times that you can trade around the markets. And I was trying to explain to, you know, business owners how that works, or how you can use that FX market, especially in California, to trade around your busy schedules. And they're like, well, you know, what should we do? Should we just follow like everything that you do here and your patterns in play? Because, you know, we'll just make money that way. And I'm like, no. If you do that, expect to be wrong, you know. And I said, here's statistics over the course of 7 years worth of our entire team's statistics. You know, we're only right about 52% of the time, but it's all about the risk reward, where we have, you know, a risk reward ratio of 3.4. That means, you know, for every dollar we risk, we're looking to make 3.4. You know, so the overall return over the course of those years has been about 270% return, but it's because, you know, it's active risk management, which is the most important thing. And I want to make sure I point that out, especially those of you that are newer traders. You should realize that you're gonna have situations where you're off, but it's all about risk management. It's all about making sure that you are always managing risk, because let's just assume you're going to be right 50% of the time. That's being good, right? So anyway, just a topic for conversation I thought I'd bring up on this kind of slow day. Hey, so I know today, the rest of the day is probably going to be fairly slow as we head into North America. I think a lot of the trading's been done already, but, you know, there's going to be people that are pulling positions off, you know, as we head into the European close. Do you guys have any last minute good ideas? Because I'm going to tell you what mine is. Going into the end of today, I'm going to look for the dollar Mexican peso to reverse here. And I don't know if we're going to get back above 19, but I think we'll be back above 19 by tomorrow, maybe the next day. This is kind of my actionable idea of what I'm looking to happen over the next 24 hours. How about you, Kman? If you're still, it looks like he's gone. Ryan, if you're still here, what would you be thinking?
What, just for today?
Yeah, just like over the next, you know, as Europe goes home and as US enjoys their holiday here.
Just look for any outsized moves that take us out of, you know, what the paths we've been walking. We know the dollar's been on the bearish side. So if you get out the dollar yen move up, that might be something to look at coming back in for tomorrow. So look for, when you get quiet periods, I look for anything that kicks prices out of sync with what the general trend is.
Sounds great. All right, Steve, last minute ideas, because Stelios took off.
I think we got quite a lot of information from the way we closed last week, and I'm looking forward to see if we're going to have continuation of the trends this week, because you know very frequently how the beginning of the year goes, the rest of the year goes, right?
Yeah, that means outperformance by emerging markets, and you know, outside of the U.S., China. That seemed to be,
that was already the theme. That was already the theme for the end of 2022.
Okay, it's old news.
All right, and Dale, I know you got an interview coming up, but before I let you take over with the interview, I'm gonna ask you, what are you thinking going into North American trade today? You can do anything.
I like the little 3 drive on the Dixie on the 4 hour.
All right, let's take a real quick look. That would be let's see, a 1, a 2.
I don't know. It looked different on my charts. Yeah. Anyway, 1, 2, 3 like that.
Yeah.
Actually has almost a better RSI structure than the yen. It didn't get as oversold as the yen did.
Got it. All right. Well,
and fade the banks, like Ryan says. Fade the banks.
Yeah, Morgan Stanley, I think, out being looking for Euro 115. You can clearly, they can clearly take my 101 when we get there. I'm
with you, Blake. Maybe 111, but I think we'll have a chance in your par again this year, maybe in the spring.
Yeah, I still think that the euro is going to see a little bit lower levels. One thing that, you know, we have to keep in mind that the Fed might readjust the way that they think, and we might be thinking, you know, second guessing what the Fed's going to be doing. We're definitely going to be doing that with the ECB in the coming months as well. Hey, I just want to mention, if you guys haven't taken advantage of the pricing that we do, you know, the adjustment we make once or twice a year, we have the buy 1 month, get 1 month free, 30% off semi-annual and 40% off annual discounts. You guys have been around now for listening to the show for 7 years. You know, we only do it twice a year, sometimes 3, depends on, you know, the year. But it just doesn't happen that often. So if you're waiting for our pricing discount, we're in it. So enjoy it. Dale, I'm going to pass it over to you. Thanks, team, for being here. Have a great remainder of the session and a good holiday for those of you in North America that are celebrating. Dale, pass it over to you.
Okay, Steve, see you, team, for Turnaround Tuesday tomorrow. Thank you, everyone, for being here on a holiday. And it's my pleasure to introduce Ayesha, Tariq, a new guest, and Mayhem. Welcome to F.A.C.E, both of you guys. Great to have you.
Thank you so much, Dale. Thank you for having us on.
Okay.
Thanks for having us.
Great to have you guys. You know, I've been following your tweets. Congratulations on getting your views seen on Fox Business, Ayesha. So that's
thank you.
And I was wondering, were you guys going to be sharing your screen and showing anything today, and you want to stay off camera and just talk? It's up to you guys. First,
so I don't mind turning my camera on. That's
okay.
fine. And
okay.
I think,
I'll do it too.
Yeah.
There. Nice to meet you.
Great. It's nice to see you.
And Mr. Anonymous Mayhem, I know he's going to keep his face today.
Well, good for him.
All right.
He doesn't have to put on makeup.
All right. So, you know, before we get to the markets and what you do, it's always interesting to hear about people's origins and their journey and how they ended up in the industry. Ayesha, you want to just tell me, I know that, you know, probably when you were in high school, you weren't dreaming to be doing something like this, or were you?
Not at all, actually.
Okay.
You're absolutely right. No, in high school, I wanted to be in advertising and I wanted to be in marketing. So that was something that I was very, you know, interested in. And in fact, that's what I studied even in college. I never studied finance. But then there was this great opportunity with an international bank called Standard Chartered. I'm sure you've heard of it. Yeah.
Yes.
And so I joined their, graduate program, and the rest is history. And I became a corporate banker after that. I spent the next 12, 13 years of my life in corporate banking. Thereafter, I moved into asset management. I was the head of treasury for a local group here in the UAE. I live in Dubai right now.
Okay.
And so that was a very interesting role because we had a sizable portfolio, about 300 million in listed equities, and about 700 million in hard assets, hotels and real estate. So quite an interesting mix of portfolio. We were, raising debt and at the same time equity as well. We were investing in businesses. So it was a very interesting role. I left. I did that for about a little over 2 years, and then I left to start my own consulting company, financial consulting, helping smaller businesses, medium-sized businesses raise equity, raise debt. And thereafter, I got more focused on the markets, particularly during the pandemic. We didn't have many deals around. Going out was difficult. So what do? You work from home. And so I started, looking more and more at the markets. It was a lot of what I did in my corporate banking life, studying companies, looking at, what's good, what's bad, what to invest in. And so thereafter I joined Mayhem and the team at Trader 8. And so now we have an educational platform where we try to educate retail traders on the markets, on macro, fundamentals, and trading.
Okay. So Mayhem, you probably had to find something different when they gave your role on TV to Mayhem that promotes, I believe, auto insurance. And you had to go to the markets. Have you seen that guy on TV?
Yeah, no, he's great. And I remember seeing him from Oz originally, and he's actually quite a good actor as well.
Okay. So your journey, buddy.
Yeah, so I grew up in a household where my father was very into investing in the stock markets. There was always CNBC or other financial media on TV. There was always an Investor's Business Daily or Wall Street Journal on the dining room table. And so I found myself immersed from a young age in markets. And when I started to make some money, I wanted to play around a bit in the markets when I was younger. So I asked to put on 2 trades. I borrowed a little money from my dad. I put some of my own money forward, and I bought some Yahoo and some Amazon back in the .com boom, and they both doubled in about a day, and that quite frankly terrified me, because that's just not how things are supposed to work. And the first thing that I kind of thought about was, well, if this is how markets work, no one would work, no one would have a job. You'd just put money into Yahoo and Amazon and cash it out, and you'd be set. So I said, take all my.
What happened. That's what happened during the pandemic.
Yeah, and
they
we can see how well that went.
Work. Yeah.
Right, but we can see how well that's worked for all the people that held on to those bubble stocks, right?
Yeah.
So I got out of that, and I just kind of wanted to learn more about how this would even be possible. And I watched the .com bubble bust and sort of the chaos unfold. But one of the things I noticed back then was that no matter where you are and who you talk to, and even me at a young age, I could hop in a cab and the cab driver would be talking about the stock market. And I just felt like that was very unusual. So I saw that all play out. And then I said, I'll learn more about the markets. I'll get back in when I have some more money and some more knowledge. And so I got into, doing consulting. I've been in technology for quite a long time, and I started making money and, investing it and trading it in 2005. And I did pretty well. And then I got to 2007, and I had some good long-term capital gains. And I saw the market kind of put in what looked like a longer-term double top in the later part of 2007. So I said, look, I'm seeing some weird things out there. I had bought a home not long ago, and I noticed that when I refinanced, that they basically gave me a no income, no documentation loan that I could just walk in there with a pulse. Yeah, I could basically walk in there with a pulse and buy 3 houses. And it was just incredibly disconcerting. So, as we got into the the fall of 2007, I said, you know, I think I'm just going to take my chips off the table. If we break above these all-time highs, I'll get back in, because that'll show me that there is conviction that buyers can take control from here. But if they don't, I'll just step aside. I'll take my long-term capital gains. I'll pay taxes on it, and I'll sit and wait. And so I did. And I had no idea what all was going to unfold. All I knew is what I was hearing in the news about money markets seizing up in the August of 2007, the Fed continuing to push on rate hikes. And I just felt like the backdrop wasn't very good. And then the great financial crisis unfolded in front of me, and it gave me an opportunity to learn a lot more about the plumbing of financial markets, the economy, and sort of the value of understanding this and how it could really impact price discovery. And so from there, I traded throughout the great financial crisis. I woke up on some days where the Dow was limit down and the Fed would come in and intervene with a 50 bips cut. It would be sort of a stick save for a lower high, and then we'd plunge to new depths. And it was pretty fascinating, and that had me enthralled. So I started to get more into trying to do more in the financial industry. And in the years ahead, I started doing consulting, taking my acumen from tech and advising institutions and investment managers on what I saw in technology and trends, and which companies made sense to consider investing in and which ones were best to be avoided. And that's kind of how I got my start. And since then, I've been actively trading and investing, and co-founded TraderAid in January of 2022 with my buddy Horse. And then I should join the team just this summer. And you know, the three of us have been growing the company and having a lot of fun and educating a lot of folks. So it's been a great journey.
I like the pairing of three. Three is a powerful number to me. It's a number of completion. And I also believe in, you know, 1 + 1 + 1 equals 111, not 3.
There we go.
You know, if it's symbiotic, it can be powerful. So let's move to what's top of mind in the markets. And, you know, I want to start with Ayesha. It's my belief that the dollar is the fulcrum of the wheel, that all other asset classes revolve or spin around them. And, you know, in a couple of months, we've had a very big hit to the dollar when no one was expecting it. And now it's starting to get a bit crowded. What's your view on the Dixie? And do you believe that this is the beginning of a major bear market? And is it a little bit too much too fast and nothing goes straight up or down, right, Mayhem? Could we be near an inflection point for a bear market rally in the dollar?
Actually, yes, I think so. I actually had some slides prepared about, you know, earnings season, because fundamentals is what I do. But it was more of a long-term view on, you know, how earnings season will probably play out and set the stage for 2023. So if you talk about immediate term trends, I think it's you know, either or. So you could have the S&P driving the dollar, or the dollar driving the S&P, right? So
it's all one market nowadays for a year or two, isn't it? You know, the only difference is magnitude and size of the moves.
Absolutely. So I think earnings season is going to play quite an interesting role this time. And if I may, I'd like to share some of my slides, if that's okay.
That's great. So I stopped sharing, and all you have to do is go to the bottom of the screen. I'm sure you guys have been on Zoom before. See it? Little green button says share screen.
Yes.
Here it comes. Okay. Got it.
Great. Okay, so basically, what I wanted to look at, as I said, is a little bit about this earnings season, and then how we're looking at it, you know, in the broader context of things. So where will 2023 kind of take us? I know it's a little premature, you know, making estimates at the beginning of the year, but I think we've seen enough of the macro picture, and we've seen enough of what's happening. And the Fed's been very clear about, you know, their message and where they want to take things. So I think we can make some reasonable assumptions, let's say, as to what we would probably see in the S&P, or where the S&P would be by the end of the year. So starting off with earnings season for this quarter, this is the first quarter we're actually projecting a negative growth in earnings. So technically we're entering an earnings recession this time. And I do think that this number of, you know, let's say around 4% is actually quite low. I do think we will see a slightly, further decline in earnings. Now, the one thing you can see obviously on on the left is that energy has actually propelled earnings, and they've held it up quite well for almost all of 2020. Yes, absolutely. So I think a lot of that will continue to feed into earnings for the last quarter as well. The other thing about energy is, even though people have seen a pullback in oil, and technically, yes, going from $100 to $70 is a pullback, but in the greater context of things, $70 is still pretty expensive. And the rate of change has come down quite a bit. It's declined drastically. So we think that, we're feeling a lot of relief when we look at the CPI, when we look at, gasoline prices, when we look at diesel prices. But in general, it's still quite high. The average of, the average price of energy in the last 10 years has been less than $70 a barrel. So we're still looking at 75. Even a $5 increase from that $70 mark actually feeds into the system and pushes things up quite a bit. So that's something to remember.
So now inflation continuing to be sticky, and a premature call of victory on inflation, which happened several times in the 70s, where they thought inflation had peaked and the Fed had to come back in and start a tightening campaign again. That's what you see on the horizon here?
Absolutely. I do think that we will see a few things go up here and there. So we talked about energy and how it's come down quite a bit. But again, you and I both know the price is really volatile, and it won't take very much for it to go up again. And we're seeing things happening in the market, right, that might drive the price of energy up. And even a temporary increase to say, let's say $85 or $90 a barrel is enough to, shake that number where energy costs are concerned, because they feed into it pretty quickly. They feed into the CPI numbers.
Have you ever seen a year where you could get a move in WTI from 130 or 120 to 70, and the oil shares continue to show leadership? They look like they're completely unrelated industries, that the underlying commodity was in a bear market while energy stocks held up the market. Have you ever seen that before?
Actually, not like this.
Yeah, I've never have either. It was kind of amazing to me. You look for a continuation of that, because most strategists are still very constructive on oil shares, the energy complex.
Yes, and the reason is, I think people do understand that what we faced in the last 2 years is, we don't have enough energy resources, and they've come to realize this in the last 2 years. So I think there still is a lot of investment going into or let's say there's a renewed interest in investments where energy is concerned. And I'm talking about oil companies. So this is why I think part of that is what's driving the price of the energy stocks. And obviously money flowing into that is going to lead to, further investments and, better returns. The other thing is what we started with. So this is a nice chart that shows, what people are, what the negative issues are facing companies this quarter. And the first one is exactly what you spoke about, the dollar, right? So the strength of the dollar has really hit earnings in the last quarter. So the third quarter, let's say, that's when the dollar was very, very strong. And while it has pulled back significantly in the last 2 months, I would still say it's pretty strong compared to where it should be or where we've historically seen it to be, right?
Okay.
And I think this still flows through to earnings, and I do believe that we're going to see that come into play as well this quarter. The other thing, which will also affect CPI to a large extent, is wage and labor costs. So that's basically the second biggest issue that companies are facing right now. So they're still seeing wages go up and having to pay workers more. And that obviously, takes money out of earnings for them.
The Great Resignation is a secular shift in labor supply, along with the demographics also not being supportive of more labor, and people aren't coming back to work.
Absolutely. And I think some of that will remain sticky. Some people will probably never come back to work, and they'll choose to work from home or start their own thing, however it might be. But I mean, look at us. It's so easy now for us to be able to do business, and not just in a country, but all around the world. And all of these technological advances, I think, has helped. And you're right, there is going to be a secular shift versus, something that's just very short-lived.
Okay, and that's what the Fed is very focused on, to be able to, what they say, get their job done. They have to create an employment recession in the face of a smaller supply pool of labor.
I mean, so the issue is, I think it's a bit of a chicken and egg situation, whether they want to create the employment or unemployment situation, or the unemployment situation gets created. But either way, one will be driving the other, right? So, and that's something that, unfortunately, we will probably need to see if we want to see, inflation come down meaningfully now. And we would need for the supply and demand to be more in balance. So speaking of the dollar again, this is like another slide which I wanted to kind of show, because it shows, companies that have over 50% of their revenues coming from outside the US are expected to, yield a much worse number in terms of earnings. Whereas the companies who don't have as much, they see their earnings go down by only minus 1.8%, which is not quite, it's a stark difference. So this makes it very clear that, the dollar is playing a huge, huge role. The strength of the dollar is playing a huge role when it comes to beating earnings down. So I think that's something that will still continue to play out even in Q4. And speaking of, the dollar gaining strength again, I do think in this quarter we see it start to gain strength again, which will then affect next quarter's earnings. So
interesting. Okay.
I think this year we still see the dollar have quite a lot of an effect on earnings in general,
let alone egg prices. Okay, so right, I mean, the Fed can't control food prices. It's all Mother Nature, right?
So in a sense, yes, it is all Mother Nature, but also in a different way. Again, it's a little bit of a chicken and egg situation. As inflation started to go up, I mean, forgive my pun, but as prices started to go up, companies had to raise prices, retail prices as well, to cover the input prices. And so it piles on. And so now the situation that we're probably going to see is that we'll still see some prices, particularly for staples, still remain high, whereas input costs are coming down, which is one thing that I discussed even on Fox, that's why I think, consumer staples will tend to do slightly better, because you'll see input prices coming down, but the revenue levels still staying quite, relatively high. So you'll have more margin and therefore more profitability and, better performance. But one concern that sorry.
Oh, no, that's okay. The meaning and what you're getting from this monthly inventories chart that we're looking at.
Yeah. So the one thing that we saw in the last couple of months is a lot of complaint around inventory buildup, and how companies were saying that they had too much inventory because they had ordered too much, and then demand started to slow, and obviously people didn't want to buy discretionary items anymore. They were more, they were spending more of their money on food and basic products. So a lot of this inventory piled up. So while a lot of them did get rid of their inventory to a large extent, especially during, let's say, the holidays, by discounting and all of that, and that in itself will also hit earnings. But what we see is the inventory levels are still quite high, much higher than they should be. And so I do think that we are going to see a few more quarters of, discounting and, bringing prices down significantly, which in one way will help, the CPI numbers, but at the same time, it's going to hurt the companies, particularly discretionary companies, who are making goods and services that are not basic products. So
Okay.
we see a disconnect over here also a little bit.
So let's say, do you feel that these things are not priced into the market, and that the October lows, based upon these fundamentals, will be threatened sometime in the first quarter?
So some of it obviously has been priced into the market, and I do think people have caught on quite a lot more than what we saw in October, for example. And the reason is we're finally, coming to grips with the fact that we are in a bear market, and we know that earnings are going to come down. I think the market is recognizing these issues a little bit more as we go on. So I do believe some of it is priced in, but there's always room for surprise, right? And so, for example, this chart shows us that, so the gold line is basically, price dispersion of the top 5% of the S&P. So you can see that the big boys are actually pulling earnings up, right? Versus, the smaller companies. I think this is something that's going to change, because what we see in a bear market, and I know you all know this much better than I do. I've only lived through 2008. But basically, it's the smaller companies that go first, and then it's the bigger companies that
Then the
start to
generals.
fall.
First
Yes.
the troops, then the generals.
Exactly.
Yeah, I want to bring Mayhem into this, and I saw a chart that you tweeted, Mayhem, if you're still with us. I believe it was it money supply? And you showed this very huge decline of liquidity, and people are saying that financial conditions are easing right now, and the chart that you showed definitely shows a different picture of financial conditions. You want to elaborate on that?
Sure. Well, I think there are two different areas too. So money supply is really, what we're seeing is the growth of money supply is having a very steep contraction, right? We're actually starting to see a decline in money supply. It's going to take some time for that to really affect financial conditions, which in Fed speak is really just, hey, how expensive are bonds and stocks? And from the Fed's perspective, and it's a little more nuanced than that, but that's the big takeaway for traders and investors. The Fed's saying that they're too expensive, that they need to come down further. And in fact, we've had a pretty significant loosening in financial conditions from the tightness we saw in October, where that low was put in on that lucky October 13th CPI day, where we had that very violent reversal. Right. Yes. So I think we still have financial conditions as evidenced by an S&P approaching 4,000 in the cash index, and by bond yields seeming to have dropped, the dollar continuing to drop. None of this is doing the Fed any favors. Powell has, of course, spoken about the idea that these wealth effects have manifested earlier and earlier retirement, going back to what you all are talking about with the labor force. That's one of the reasons there's not enough participation. And so one way to get people back into the labor force is to make it so that early retirees sadly can't retire.
Yeah, by taking down the value of their 401ks and retirement plans.
And real estate too.
And potential pension crisis. Biden had to boost a Teamster pension. That could be something looming on the horizon. So, this has been an outstanding interview, and I could talk to you guys for about, I don't know, a day. But what I'd like is best idea, it's halfway through January, what you feel is going to be the best way for people to consider everything that you guys have talked about. Should people be more interested in the return of capital than the return on capital? And is this rally that we're seeing in the precious metals, does it have legs? And what's your preferred intermediate call, your best call intermediate term, say into the beginning of spring?
Sure.
Mayhem?
Yeah, sure. So, I mean, I think that we are seeing some relative strength in materials, in metals and mining, particularly in industrials versus the broader market. So those are areas that I would continue to focus on. I also think it's interesting, speaking of agriculture, to look at soybeans. They seem to be putting in a low and starting to rally off that low.
Yeah.
And I also
Beans
like
in the teens used to be the war chant on the board of trade. Now we
Very
have
good.
to come up with something that rhymes with 20.
Yeah, I think
sure.
well, we don't have copper aplenty, so
Yeah.
maybe that rhymes with 20, and that's something to look at from a production and supply deficit standpoint as China comes online.
Okay, I appreciate that. Ayesha, your advice for people with what you're presenting with the potential earnings recession that you don't feel is priced in, is this a time to be, more in cash?
So I would say that yes, I think taking it one step at a time would be very important, right? For me, I still like the defensive sector. So I like consumer staples, I like utilities, and I do like a few choice industrials, the stronger ones, because industrials still tend to do quite well when the Fed is raising rates. Interestingly enough, even though they're capital intensive companies, they still tend to do quite well. So I think we've seen some strong leaders in, say, Caterpillar and Deere. Yeah. Now these have run up quite a lot, but I think a lot. But I do still see strength in these if, we can wait for a pullback. We might see some pullbacks during earnings because we might hear some surprises. So I think earnings is a good time for us to wait for, let's say, pullbacks into stocks that have been strong and will continue to be strong, at least until, let's say, the end of spring.
Okay. All right. Well, a great interview. And you guys now, Ayesha, you're my trading warrior sister, and Mayhem, trading warrior brother. Really appreciate you guys coming in on a holiday and edifying the F.A.C.E community. Glad that our paths crossed, and I'm rooting for you guys in Trader Aid. And the best way to find you guys, of course, on Twitter, you could find Ayesha at Ayesha Tariq, and you could find Mayhem at Mayhem for Markets. What an appropriate title for that guy. Thank you, Mayhem.
Thank you. Appreciate you having us.
Appreciate it. Great. I'm glad our paths crossed. Hope to be able to have conversations with both of you guys down the road.
Thank you. Thank you for having us on. Take care.
You're very welcome.
Thanks
Remember,
again.
Don't just count your pips, count your blessings. You could join the team in 12 minutes. Thank you, everyone. And